Good day. Jeffrey Friedman, Senior Market Strategist, RJO Futures, with my daily comment on stock index futures. I always give you a word of the day, and I'm going to use the word of the day is the employment report, monthly, non-farm payroll, if you will. I could have used ECB, which was very important yesterday. I could have used interest rates. I could have used our Federal Reserve, the FOMC, but I didn't. I used employment because it's the tail end of a very helpful week, breakout, hitting the target. Last Friday, we talked about a target of 1940. We're above that, and we'll get into the technicals in a minute. Let's get back to the word of the day, employment. We did hit the mark. We were looking for about 220, creation of jobs. Now looking at it, and we're looking at the unemployment rate at 6.3. That's where it was last month. That's where it is now. The problem is some analysts are looking at this report and saying the participation rate, the people that are participating in employment that are eligible to, which is around the 62, 63, 65%, lowest since 1978 or 9. Now, have said all that, that's kind of worrisome. The report itself was in line and right. We're up 7 points because of that. We were up 1 point before the report came out. Yesterday, the ECB lowered their interest rates to stimulate their hurting economy, which they have deflation, not inflation, to a negative number. That's very important because what does that say? When you have money in a bank, you are paying that bank to hold your money. They're not paying you to use that money on every aspect and how it implies. So what does that teach someone that has cash or money? It tells them, don't put it in the bank, and the banks don't put it with the Fed, whatever Fed of that country, when you have a negative rate. And what does that really mean? It means that we want you to spend it. We want you to buy stocks. We want you to buy bonds. We want you to buy commodities. We want you to use that money to get a return, because otherwise you will have to pay us to hold your money, the Fed or the bank. That's what a negative interest rate would do. They're trying to stimulate people to go from deflation to inflation in some regards in Europe. We had a different way. We were doing a bond buying program, which we're trying to taper down, but still using. So China's stimulating, Japan is stimulating, Europe is, and America is. It's no wonder the stock market index futures are at an all-time high and making higher. My comment last week was the trend is your friend. We're going up to 1940, and we hit it. We're above it. And because we're above it, I have to give you a new target. Okay? The new target's going to be, on a technical point of view, 1970. We're at 1945, 1946. In my opinion, the trend's your friend. Proceed with caution. Tight stops at all times. Okay? Now, where would I change my mind? 1905. If we can break and close under 1905, 1900, make it easy on the thought, on the chart. If the market is going to close under 1905, it's going to close under 1900. That's where the bears would take control, and maybe the momentum would be over. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.